Steve Rhodes.
Good afternoon from TFNN. Excuse me. Welcome to the November 7th wonderful Wednesday edition of today's Traders Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. How about we have an extraordinary one? And you know the easiest way to do that? It's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, hey, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, and I mean more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, we've got you covered. All you have to do is let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, in the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 380 points. 26,016 is the print. That's 1.5% to the upside. S&P's up 1.6%. That's 44 points to the upside. NDX 100 up 2.5%, 177 points to the upside. Russell 2000 up 17. Semis up 12. Trannies 184. Composite, NASDAQ Composite up 158. New York Stock Exchange up 143 points. Wilshire up 442. Spot volatility index off by minus 15.22%. Anything below a minus 10% is a acceleration move signal. Initiation to higher prices to come. So watch that at the end of the day. It's trading, by the way, down $3 at 1688. Underneath its 50-day exponential moving average. Gold is up $2. Silver's up 8 pennies. Light sweet crude off 39 cents. Trade out at 61.83. Leading the charge dollar-wise to the upside today. It's Amazon up $98. Bookings holdings up 43. Google up 30. Twilio up 25. ABI Med up 24. Intuitive Surgical 21. To the downside, Medifast. Talking about going on a quick diet off $63 or 30%. Inogen off $37 or about 20%. The jazzy one, Jazz Pharmaceuticals, off 13%, $21. So we've got movers and shakers to the downside. Of course, I want to take a look at what you want to look at. So let's go to our first questions that came in a bit earlier by email. First coming in from Bob Y. Bob says, hi, Steve, nice show. Well, thank you, Bob. Appreciate that. He says, your take on natural gas, please. If you have time, your take on silver. I'm short natural gas and long silver. I'm short UGAZ. I don't know if that's the long version of natural gas or what, and your long USLV. I think that's the long version of silver, but hi-ho, silver. But let's go take a look at natural gas and silver. I won't worry about whether I've got your ETFs correct or not. I'll just simply take a look at the chart and tell you what it is doing and what it is not doing. So if we go take a look at natural gas, let's begin by looking at the February futures. This is the wrong chart. If we want to take a look at Sienna Corp, though, then I'm in the right place. But that's not what we want to look at. Instead, what we want to take a look at is the February natural gas contract out. January. I apologize. Did I say February? I said February just to confuse you, but we're going to call an audible here, and that means we're going to really look at January. So my take on it is that, look, it's bullish for the 4 time frames that are up on my screen. That's 60-minute, 240-minute, daily, and weekly. You're above the profiles, with the exception of the 240-minute chart. So I said it was bullish. It is bullish. It's really a consolidating bull message on a 240-minute basis, meaning it needs to clear 3.585 to continue moving higher. Now, if you're actually short natural gas out here, there must be some type of topping pattern that you see. Unfortunately, and I do mean unfortunately, I don't think in my in my Ninja Trader symbols just yet. I've got the January contract. So what I'm going to do, I'm looking to see if I do, but I think I don't. I looked at that earlier this morning, and I just simply forgot to do it. It just means I'm going to have to go ahead and put up the continuous contract. I want to do that from a daily time frame. It'll be relatively accurate out here. So if you're short natural gas, I don't see it. I want to take a look at the daily time frame chart. But of course, let me do this. Let's take a look at wave counts. Let's go ahead and complete the system out here. I've got this automated tool so that I pick the right swing points to begin from. So now I've got that out here. And let me do this. I just don't see it. I don't see a topping signal out here, Bob Y. So if you're short this, okay. You would be finding, you'd be looking for support at 340. Trading right now at about 354 out here. So I just don't see a pattern. If anything, this could be an A to B equals CD to the upside. And just take a look at the daily continuous contract out here. So the prices are not necessarily going to mesh, but the patterns are just fine. If we look at that potential A to B equals CD pattern out here, it's got a large move underway. The move would take you up into, on the continuous contract, around 370 or so. You know, check back with me tomorrow and make sure that I get the January contract in here so we can take a look at that. I can give you exact numbers. Well, shoot, I don't need to do that. I can give you exact numbers right now. Hello, you know, I have not had a ton of sleep, like perhaps many of you out there. So the head's a little groggy. Here, I'm going to give you the A to B equals CD pattern on the actual contract. That way you've got the exact numbers. So you've got 1-to-1 at 375, 1-1.272 at 390 out here. So, Bob, I don't see it. And I don't know that you're short natural gas. I can't really tell from the symbols that you gave me, but I would be more happy to hear that you were long natural gas, not short natural gas. You asked about silver as well, so let's go take a look at the silver contract out here. We'll take a look at the same set of profiles, same time frame set of profiles out here. I just have to find where did I put the silver contract, trading up about 7 pennies out here. What is silver doing? So you're long silver, and what you really want to be looking at, what you'd like to see, is you'd like to continue to see, so this is really interesting here. One of the things that we can see is that for the second day in the past 2, 4, 5 days, we've got an orange colored bar. And what that means, Bob, is that silver's trying to create a brand new daily market profile. Nonetheless, it hasn't just yet. If it trades below 14.568, anticipate lower prices. Where? I'd look back to the trading session of November the 1st. And I know you're long silver. I'm not saying not to be long silver, but there's no real breakout message as we speak right now with regard to hi-ho silver. Steve Rhodes with TFNN. It is Wonderful Wednesday. We'll be right back. Strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of the Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's go to our next question that came in. This one from Tom G. So Tom says, good afternoon, Steve. So good afternoon to you, Tom. Like a roller coaster, but I am buckled in and not complaining. Thanks for the advice. I sold half yesterday. So this is with regard to SCO. That's the short for light sweet crude. So sold half yesterday right after you talked about it, bought it back this morning, and then some and just sold it all here. Okay. Now I just got back in 1835. I'm wondering your thoughts again today. Okay. So let's do the same thing that we just did. Let's take a look at the December contract for light sweet crude. And this is right now trading right at support, Tom. And when I say right at support, what I'm looking at is the weekly chart for light sweet crude out here. And the bottom of the box of the weekly profile, 61.88. We're trading at 61.88. I mean, truly 61.88, 61.89 as we speak right now. So from just a technical perspective, and I know yesterday I got carried away, not really carried away, but I gave you my non-technical analysis with regard to light sweet crude, and that is that light sweet crude is headed lower. But the reality is, look, this is a technical analysis show for the most part, and price is trading right now at support. And I know that you are a shorter term and duration type trader out here, and ideally you'd like to see this trade below the support level of 61.88, and we're trading on it right now. So what should you do? On a daily time frame, don't have any signals whatsoever to suggest that one should be long. However, counter trend rallies could easily take you up to 64.65. You're at 61.92. I know you won't let it run that far. If I take a look at a 4-hour time frame, the 240-minute chart, that would be panel number, 3 from the left. 61.51 is a level of support. Resistance would be 63.32. So based on this, I'd say, hey, go ahead and go flat on the trade. Wait to see if this thing can bounce into about 63.32 to then perhaps go ahead and fire away at your next trade out there. So that's all I see right now with regard to light sweet crude out here, especially in light that, hey, you've taken your profits, you've been in, you've been out. Right now, I just have to take a neutral stance on it because price is right here at support. So I hope that that helps you out as well. Let's go to our next question out here. This is from JJ, and James wants to go take a look at Amazon. So let's go ahead and put Amazon on the screen out here. We're going to look at 3 time frames, daily, weekly, monthly, and let's read James' question. Hi, Steve. Hope you have an amazing, a great day. I consider great to be amazing. Thank you. And I hope you have one as well. Says, I won't say, someone thinks Amazon will pull back in the short term. What do you see for it? What might be a good entertaining point for a short-term to mid-term hold? So let's take a look at Amazon and get a feel for what it is doing and what it's not doing. So right now, it's trading with inside its daily profile. So let's take a look at what's going on a daily time frame. First thing is, actually, I want to step back, JJ, just for a moment. And the reason I want to step back for you is because I want to take a little bit further look at what it's done on a daily time frame. Now, you and I, and of course everybody else that's a part of this show out here, are the ones that have Stevie's tools. And Stevie's tools are PDG, pretty darn good. Now, one of the tools is really excellent at being able to identify tops and bottoms. Here, what you and I are looking at is a bottom inside of Amazon. We can see how price was stretched. We can see how price was moving lower, doing less relative energy. That's one of the Rhodes momentum indicator signals. You can see the black lines beginning to be drawn. And what we can see that took place inside of Amazon on October 31st was a gap to the upside. On my chart, it says rising window. By the way, gaps are your friends. Yes, I know everybody says gaps get filled, and maybe they do, but maybe they don't. But what you want to take a look at is gaps in the present tense. And gaps in the present tense are signs of strength. Because you could have some people that would say, hey, look, that's a wide-ranging bar. And people don't say, well, wide-ranging bars get filled. Well, why not? Wide-ranging bars and gaps are basically the same thing if you go ahead and you color them in to fill in the gap. Just Stevie's way of thinking. But here's the point that I'm trying to make, is that when Amazon was moving down and creating that Rhodes momentum indicator pattern, it gave you the bullish signal, the reversal signal with that gap to the upside. Then on the very next trading session, you had price close over Stevie's red line. That was November 1st. That said, okay, bottoms up. Now what you have is at least an A to B equals CD to the upside. When I say at least, maybe it's more than that. I don't know if the swing point is being taken out with volume or not. Maybe this is just simply setting up a Gartley sell pattern. That's possible. But the 1-to-1 A to B equals CD is 1817.44. Is it headed there? Probably not. It's probably headed higher than that. I'm not talking about what it's going to do the next moment, 10 minutes from now, but you were asking about midterm type of trading entry point. Well, that's easy. It would be a pullback. If somebody gave you advice that it was going to pull back, then at this stage here, we'd say it would, of course, be Stevie's red line. The line that it got above. Stevie's red line is 1643.06. That would be the number that I would give to you. Of course, you would want to see it pull back into that area on lightish type volume out there, and you would be measuring it against the trading session of November the 5th out there. So at this stage, maybe there's a Gartley sell pattern, maybe not. But it looks like if we take a look at volume today, just for the heck of it, volume today inside of Amazon is 5.2 million shares. The swing point has 6.9 million shares. So as we like to say in TigerTV land, you've got a confirmed A to B equals CD to the upside. Now the top of its daily profile is 1809. And that's the next area of potential resistance. So you've got 1809, 1817, that is the one-to-one completion area of the A to B equals CD to the upside. So that's where price is headed to. And I would have to also say in the short term, that's where it's headed to. If I take a look at the weekly time frame chart, what we'll see is prices trading down below the bottom of its weekly profile. So that too is another potential area of resistance. That is 1801.56. If price gets back into that, closes above that level, then as Tom has taught us to say, in this case here, using market profiles, then price has gotten back inside its range of weekly profiles. And then price could easily move up to 1926, 1957. In the case of the monthly, almost said weekly, but I caught myself. In the case of the monthly chart, we're trading in between a new profile that began this month, the month of October. 1910 is resistance, 1422.64 is support out here. But the Rhodes momentum indicator inside of Amazon, we could just simply go through a list of all kinds of charts everywhere, clearly was the signal that was saying the markets were making their normal fall bottom. And that probably is most important out here. There is a Santa Claus rally that begins every year. Over the last 86 years, it typically begins around October 13th. This year, it appears that it was October 29th. And the day that Amazon confirmed its bottom, well, that was October 31st, when it gapped to the upside. Hope that helps you out. Stevie Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And listen, I do want to say I really do appreciate each of you taking the time to go ahead and let your fingers do the walking and send questions, because really this show, and I do mean what I say, which is that I am grateful for your presence here, and this show really is for you. So my preference is to always cover some type of instrument that you specifically are looking to trade. So when you send your questions in, it makes the show go just simply smoother. And if you've got a question about something, so does somebody else. And the patterns that we trade, they apply to anything and everything. So I just wanted to thank each of you for doing that. So let's continue on, because we've got three others that are lined up right here. We got Michael R. And Michael says, Steve, DWDP, that's DuPont. That's the chart that's up on the screen, has formed an island bottom. And Michael is right. So where do you see it going from here? So here is the island bottom, Mon, and an island bottom pattern is very bullish. So Michael, good for spotting there and alerting all of the listeners here to the Trader's Edge show. Here's your island bottom. Now, it formed over a period of time. It began forming when price gapped to the downside on the trading day of October 23rd. And then from October 23rd through October 31st, it just kind of bounced around between a price of about 55 to 51, something like that. And then on the trading day of November 1st, it gapped to the upside. That creates your island bottom. So, Michael, the easy answer is it could go all the way back up to its highs. And that's the August 29th level. It's in the 71 area. You're trading above the daily profiles. And when it was forming that bottom on the island, Mon, it was doing it with a Tom DeMark setup 9 count to the downside. That was a trading day of October 30th out there. There is going to be a little bit of resistance. This is the level you're going to want to watch. So the Tom DeMark setup 9 count began on the trading day of October 18th. That sets up a natural resistance area at the high of that session, 59.62. So if price can move above that, then you will be trading above a resistance level. You're at 59 bucks even Steven. So I hope that helps you out. But longer term, if it can get above that area, you're looking at probably 62 to maybe 60 bucks out there. Let's go to our first caller. That's John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Steve-O, I'm very good. Thanks for taking the call, and
my pleasure.
Thanks for guiding us through the bottom, at least short term, maybe longer term in that S&P 500. But Steve, I wanted to ask your help, please, on gold and euro.
Yes.
Specifically gold, but perhaps the action in the euro may have something to do with things. But on gold, Steve, I can't help but observe that the gold price has rallied, but has ceased going higher in the past number of weeks, selling out near 1240-ish. And I further observe in the past 6 consecutive years, the gold price has fallen and declined into a Thanksgiving/December bottom. And without trying to figure out why gold should be under selling pressure in the fall 6 years consecutively, I merely observe that it is. Observe that the gold price has had trouble extending its rally here.
Yes.
Now, early November and early December is, just a month away. And I'm looking at the dollar and the euro versus the dollar in particular, and notice that the high that occurred last night looks, well, at least at this point, has formed an exact AB equals CD up. And who knows what's going to go next, but one possibility is that the euro versus the dollar have made a short-term high and now declines. So with those observations, can you share with us what your work says about gold and what prices, if broken, would usher in greater selling, at least according to your work, please?
Sure, absolutely. So great question. And folks, if you're watching this on Tiger TV, I hope that you are, because as John went through his description of what gold was doing and taking a look at the euro currency here, what each of us are able to do is take a look at gold priced in both U.S. dollars. I say both, priced in U.S. dollars, euros, yen, and pound sterling. Pound sterling being the chart that's on the very right-hand side. The reason why each of us want to take a look at this is when an instrument, any instrument, is moving higher in your currency, your local currency, so in our case dollars, it also really needs, in order for it to get any traction, really traction to the upside, it needs to be moving higher on everybody else's screen too. And the guy that's sitting over in London right now is really taking a look at how is gold performing in his currency, his or her currency, in this case pounds. Well, right now we can see that unless they see some type of bottom, they're actually sellers. And as John has pointed out, from the trading day of October 26, when gold in dollars made a high, recent high, gold also made a high in pound sterling, also made a high in euros. Now, in pound sterling, there was a shooting star candle that formed out there. That was not the case as I take a look at gold priced in U.S. dollars. But that's neither here nor there. We can see that the sellers are present with regard to gold and pound sterling. Now, John asked about gold, and where's price likely headed back to? Well, there was a gap out here, John, that took place on the trading day of October 15th in gold priced in pound sterling, and so that's around $929, give or take, in pounds out here. You asked about gold in euros. It too is moving slightly lower. Not so much as pound sterling, and maybe this is pulling back to the bottom of its TAS market profile from a daily standpoint, which would be 1,063 euros out there per ounce. You asked the question, what would I be looking for to suggest that maybe gold is going to pull back into the Thanksgiving time frame? And what I would be looking at then in terms of dollars. So we know that there's selling pressure for gold by traders in euros and pounds. In terms of U.S. dollars, we've got a set of TAS market profiles that you and I can rely upon. And the reason that we can rely upon them is because the bottom of the box happens to be priced at 1224.10. Yesterday's low, 1224.20. Yesterday had a range where price also went up to a high of 1238.40. The top of the daily box, 1238.70. So really within, 30 cents or so, we saw price move up and down. So I would then say to you that if you saw it close below 1224.10, then that fits into your scenario that, okay, gold is going to go lower. Go lower in terms of dollars. 1211 would be a price target. 1189 would be a price target as it would move into its weekly set of profile boxes out there. So that's what I see as we speak right now when I take a look at gold priced in dollars. Now, yen, by the way, I didn't mention that, but gold priced in yen made a new intraday high today. What does that mean? That means that over the long haul, gold is likely not topped out, but that does not mean that it can't pull back from here. So in summary, I'd be watching 1224.10 as your benchmark, and a close below that says, yeah, gold can move lower, especially if it's moving lower, if it's continuing to move lower in euros, pounds, and of course, if the yen participates, then you've got everybody on the same page. All right, my friend?
Steve, well, thanks so much. I'm going to sign off. Appreciate your help. Would you lastly, or would you comment, if you could, on that weekly TAS profile on gold? It's been the same for like 15, 16 weeks. What does that mean? What does that tell you? I appreciate it, and I'll hang up now. Thanks.
You got it. Take care. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Paff's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, so the last question that John had asked about gold in the weekly profiles is the weekly profiles, all the profiles are not time specific. And so the mathematics that go into creating those profiles are really what then are used to generate newer profiles. Now, profiles are nothing more than what I like to call hidden levels of support or resistance. Hidden because if we don't use them, we don't realize why price is stopping at one spot or another. In this case here, we were looking at the daily time frame profiles for gold. And so I was able to do is John has a thesis, and he was saying, well, where's a data point that says that that thesis is correct? Which would be gold moving down into Thanksgiving. And so we just simply relied upon the daily time frame profiles. We know that it worked magical yesterday, both at the top and at the bottom. So it doesn't matter to me, John, how long the profiles last out here. They're just, again, used as levels for support, potential support or resistance. So in this case here, we just have the weekly profiles on. And again, close below says 1211.50 on the December contract would be the first target to the downside. And below that, about 1189 out there. So that's how I use them. Right, wrong, or indifferent out there. We've got another question that came in. This was from Ron M. And Ron, so I hope that helps you out. But Ron M. writes, hi, Steve. I'd like your take on SPXS long for a short-term trade. Thanks, Ron, from St. Pete. I say you've got to hold your horses. I would not jump into a long position inside the S&P right now. Why? Well, first, you're looking for a short-term trade. So short-term trade to me means, well, I can at least go take a look at a 30-minute time frame. If we look at the 30-minute time frame, which is what we have up on our screen right now, you can see that, forget about the wave count that it's in. It's the mere fact that it is trying to complete, on a short-term time frame, a Rhodes momentum indicator top. That's right, top. Now, this 30-minute bar does not complete until 2 p.m. And that's really going to be the key out here is what does that bar look like come 2 p.m.? And I don't know the answer to that question. What price is doing right now, Ron, is pointing right back to support. Stevie's red line happens to be green. When it's green, what does it mean? It means that you've got a rising price oscillator that is above zero. So the key in order for the S&P on a short-term basis to pull back further is going to be not just the bearish reversal candle by 2 p.m., but also a close below support. We're trading at 27.96 in a quarter. It looks like it's probably 27.95.75 is where Stevie's green line is priced at, to 27.96. So a close below that then says, okay, it's got a little bit deeper pullback. That pullback, the levels of support, Ron, that you could look at would be 27.87. That's the top of its 30-minute profile. 2781, if it closes below that, by the way, is the center, and then 2769.90 would be the ultimate area. Now, it may be the ultimate area, but we'd have to see what else is going on there. So would I suggest that you take a long right now, not in looking at this time frame chart as we speak. Maybe what the ES Mini is doing is trying to get ready for a pullback. And you would have to time your trade inside of that ETF based upon this chart out here. So I hope that helps you out, but you've got to just be patient is what I would say at the moment and see how this pattern here plays out. Why is that pattern important? Well, John in Philadelphia was talking about the S&P 500, just simply the market call out here. Here's the market call. We took a look at that with Amazon. Here it is with regard to the S&P 500 as it was making a bottom on October 29th, makes that little piercing candle, bullish reversal signal on the 30th, jumps above Stevie's red line on the 31st, and that went ahead and signaled, okay, bottoms are in. That's just simply the pattern out here inside the S&P 500. All you and I are doing is just simply now, because you were looking for a short-term trade, is try to figure out what is the ES Mini doing on a short-term time frame. Right now, it's nothing more than just a pullback to support. And we'll just simply have to pay attention, or you'll have to pay attention to it come 2 p.m. to assist you in your trade and determine whether or not you should just simply sit tight. So I hope that helps you out. Ron in St. Pete. Let's see if we've got any other questions that have come in here. Phil writes in, and Phil says, I'm long GLNG. So let's go fire up that chart out here. That is GLNG, and that is Golar LNG, so natural gas equity out here. Let me get everything set up, GLNG on my other chart, and let's finish reading Phil's question. So I'm long GLNG. I bought on a volatile earnings day recently at about 28.50. It's trading right now at 29.26. It's hanging around below a gap down and trying to get into the gap. Where do your tools show support and resistance are? So as we take a look at this, what I don't know, Phil, is what does this trade off of, if anything? Is this just an equity, and therefore we don't have to pay attention to natural gas? So I'm going to treat it as such, but I'm sure there is some type of correlation there. But if you're asking for support, what I'm going to have to do is come over and take a look at Stevie's Ninja Trader chart. And support is going to be Stevie's red line. It's green right now. It's 27.98. That would really be support. See, on the trading day, Phil, of November 1st, and you probably already know this, but on November 1st, Stevie's red line turned green. And it was a bullish message, no doubt. So the line remains green, price oscillator is above zero. So if it's going to pull back and you're looking for support, that would be at 27.98. That would at least be the first level that you would be looking at, because the bottom of its daily profile is 26.45. So I wanted to give you something to pay attention to on a further pullback that was above that area. It's 28.31, by the way, on a weekly box out here. It's 25.48 on the monthly time frame. Now, you also asked about resistance. So if we pull this back, resistance is basically where it has traded to, give or take, because we're just going to use the prior swing point. So the prior swing point, well, let me just mark the bottom of that swing as well. Give me 1 second here to do that. And the swing point was at July the 9th, 2018. Now, in just basically volume swing point technical analysis, what you and I do is we take a look at that swing point, July the 9th. We see what the volume is, 649,000 shares, and we compare that to what price was doing as it got up into that level on the trading day of November 5th, 3.5 million shares. Wow. So it was pushing into that swing point with volume. Never touched the high, but it rejected that swing point, meaning it closed below the bottom of it, 29.70. The message was, I'll be back. Or would Arnold Schwarzenegger, what would he say? Hasta la vista, baby? I don't know. Does that mean I'm coming back? Or is that just, yeah, it's be until later, right? Just testing my Spanish skills out here, which, you know, basically are, not so good. But the very next day, this thing did retest that area, but on much lighter volume, 1.1 million shares. Still pushing into it with lighter volume, and actually closed just slightly above it. Said, hey, I want to go test 3041. Today, the volume is 944,000 shares. Still more volume than what took place on July 9th, but you're rejecting that level. Where's resistance? Man, for the last 3 days, in essence, it's traded into it, even though it's a swing point with lighter volume. You got to say it's 3041 to 2970. Phil, I hope that helps you out. That's what Stevie's son sees for GLNG. Look right back.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So if we take a look at the last question here that came in, this is from Ruby inside the Tiger's Den, and Ruby is asking about a correlation between the Canadian dollar, the Canadian U.S. dollar versus light sweet crude. So what I don't know is, Ruby, is which version, which way you're looking at the currency pair out here, but this is our correlation chart. So at the top, I've got light sweet crude. I've got the continuous contract out there. We've got the Canadian versus the U.S. dollar down here at the bottom. The bars that are below zero tells you there's an inverse correlation out here. So I hope that this chart helps you out with regard to that. I think there's more to do with, but you're on to something for sure. You know, years ago I used to take a look at the correlation between the Mexican peso and light sweet crude, and then the as well as the loonie, the Canadian dollar, like you're doing. I would use the profiles you know, with regard to light sweet crude, unless you're trading this in Canadian dollars, which you're probably not. Just like we had looked earlier in the show, prices trading light sweet crude right at about a support level. If it trades below that, it continues to move lower. I think there's something more nefarious, what's the right word, going on in the case of light sweet crude. I think it's going to continue to move lower. I don't think it's a coincidence that Khashoggi basically went missing on the second, or he checked in, and when he was checked out, so to speak, in a gruesome way on October 2nd, it didn't come to light, I believe, until the 3rd and the 4th, and we saw light sweet crude begin moving down from there. So there's probably some kind of tit for tat, and I think the current administration, which includes the entire administration, wants to see light sweet crude continue to move lower. And so the Saudis are a group of people that can certainly assist in making that happen out here. So yeah, price is up against support, but I'd be very careful, because I think you're going up against forces, and that's a correlation that we just took a look at with regard to the high that came in. Hey, folks, thanks so much for being here. Stay tuned. Your favorite polar bear, David White's up next. I'll be back with you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether